Hello there. Let's take a look at your markets news now. China and Hong Kong stocks edged lower today. This as anxiety over the U.S. trade policy intensified ahead of the July 9 tariff deadline. However, this deadline has been extended to the 1st of August. Although China is not at risk of imminent higher tariffs thanks to the trade truce within the U.S., sentiment was still largely subdued as U.S. President Donald Trump's policy swings left investors on edge. And Trump's warned on Sunday that the U.S. will impose an additional 10% tariff on any countries aligning themselves with the anti-American policies of the BRICS group of developing nations. And we do know that the BRICS developing countries are currently meeting in Brazil. Hong Kong's Hang Seng is down 0.3% and China's Shanghai is flat. India's markets are currently trading lower while Japan's Nikkei lost 0.5% at the close of trade. Back home, the JSE is lower at midday. The all-share index has fallen 0.1%. It's currently sitting at 97,129. And when we take a look at the currencies, the rand is sitting at 17 rand 72 at this hour. This is to the dollar, and it is at 20 rand 79 to the pound and at 24 rand 11 cents to the euro. Let's take a quick look at our commodities. Gold is trading at $3,309. And platinum is at $1,362 per ounce, while the price of Brent crude oil is at $68.83 a barrel. I'm going to be speaking to Gary Boysons, especially on that oil price that has been going down and their fears of oversupply in the market. But let me bring in Gary Boyson, who's the director and portfolio manager at Rand Swiss. Gary, always great pleasure speaking to you. Those U.S. tariffs deadline has been extended, and we are seeing U.S. stocks futures falling with the threat of the additional 10% on countries that align with BRICS, which we are part of as South Africa. To what extent is this pushing countries against the wall, especially those who are already part of BRICS like ourselves?
Yeah, there's no question that the US feels very threatened by BRICS. So if you look at BRICS versus the US, BRICS has represents around 3.3 billion people, so more than 10 times the size of the US population. And even if you compare in GDP terms, where the US is slightly bigger in nominal terms, if you consider the PPP number, the GDP of BRICS is actually larger than the US. So BRICS nations also have a lot higher growth rate. So it makes sense that the US is feeling threatened by BRICS and is doing everything they can to break down these multilateral, trade arrangements in order to maintain global dominance. So, looking at it, it's definitely going to be a pivotal week for us. And as part of BRICS, it's difficult to see kind of how we are going to move around this, especially if there is an additional 10% tariff on any BRICS nation or anyone aligned with BRICS. I think in the Truth Social tweets, Donald Trump said there will be no exceptions to this policy. So really highlighting what Wall Street is calling the taco trade, which is Trump always chickens out, and saying that this time it's going to be different and that there will be no exceptions and that they are very serious about penalizing BRICS members. Now, of course, that's going to have an impact on South Africa. But even if we just zoom out and look at I suppose where we are in the tariff picture and where we are in the pause of reciprocal tariffs currently, only the UK, China, and Vietnam have successfully concluded agreements with the US. So we're in for a couple of weeks that are going to be frantic in terms of deal making. I believe we are closer in terms of deals with the EU and with India, but there are still many countries that are going to go back to that far higher tariff regime, not just the BRICS nations. Yeah,
that same development has seen the currency. Our currency is now at 17 rand 72 at this hour, down about a percentage because of the same additional tariffs with them aligning with us. What does this tell us about what the markets thinks of emerging market economies and currencies?
Yeah, so the story of our currency, the currency strength, in inverted commas that we've seen this year has really actually been a story of dollar weakness. Today it is a little bit different, and we're seeing the rand weaken against many of the developed market currencies. So while it's down around 1% against the US dollar, it's also down, call it 0.75% against the euro and the pound as well. So this is really BRICS currencies getting hit on the back of that announcement and a little bit of risk-off mood filtering into the market. Again, it comes down to these BRICS-aligned countries and how they're going to be affected. And South Africa, while we have submitted a draft framework agreement to the US hasn't responded to us. At the same time, many of the metals and minerals, it actually accounts for around a third of the goods that we export, are adding to our trade surplus and are actually exempt. So we're going to be penalized for this under the current trade regime. So a lot of confusion around that, and that confusion just creating enough uncertainty to weaken our currency a little bit.
That would be interesting to keep a watch on, but I'll tell you something else that's quite interesting is that OPEC Plus that's increasing oil production even more than we expected. Oil prices have been coming down. I remember the time when the Iran and Israel war was, intensified, that we were already hitting plus $70 a barrel. But what is the likely effect of the surplus on the market? Because there are varying opinions about whether an oversupply in the market and what it will do to the general market. What's your thought on that, Gary?
Well, I suppose an oversupply in the market, if we do have higher growth, and obviously there is, as we said, a lot of uncertainty around tariffs, and that feeds into your expectation around global growth. But if you're just looking at the supply side of the equation, if we are bringing on a lot more supply into the market, that should be positive for inflation overall. Right now, OPEC Plus did surprise the market with a greater than expected production increase. So they're looking at increasing just under 550,000 barrels per day in August. This is up from around 411,000 for May, June, and July. So it was a little bit of a surprise to markets, although we haven't seen a big reaction in the oil market. That sell-off that we saw from kind of $75 a barrel down to $68 a barrel was really driven on subsiding tensions, as you said, between Israel and Iran. It is interesting to note that Saudi Arabia is doing a lot of the heavy lifting on this. So while Arab Light, which is what Saudi Arabia sells, is at 4-month highs, they are actively increasing their output. So there's a very real possibility that the world is going to be flooded with cheap oil. And that's fantastic. It'll improve our consumer sentiment. It's going to reduce fuel and logistics costs. It's going to keep our inflation under control. That could potentially mean that the South African Reserve Bank has a little bit more scope to cut interest rates, which I think is good news for everyone.
It will definitely be good news for me, I'll tell you that, if they cut those interest rates. Gary, I really wanted to have a chat on you about what other things we have on your diary at RandSwiss, but unfortunately we're out of time. But I'll just tell our viewers that we have that manufacturing data coming out later this week. And of course, today is the beginning of the SARS filing season. I was hoping to speak to Gary about that, but if you get tuned to SABC news platforms, you'll be able to hear more about that. I've been speaking to Gary Boyson. He's the Director and Portfolio Manager at RandSwiss.